Hi everyone, today we will walk through a 10-point checklist to ensure your financial projections are reliable, realistic, and decision ready. Each point is backed with a practical example using a fictional startup EcoWash solution, a sustainable car wash service in Dubai. First, let's start with assumptions, the foundation of any good model. Make sure each assumption is clear, documented, and tied to a real driver. For example, if your revenue is based on a number of car washes, show the volume growth and justify it. EcoWash start with a 500 cars per month and scale to 5,000 by the year end on Dubai market data. It's also important these assumptions are backed by the past trends or benchmark. Revenue projection. Your revenue forecast should be gradual and explainable. Avoid hockey stick projection unless there is a clear rationale. In our EcoWash case, seasonality and the fleet contract are focused in. We have model-based services separately from premium offering to reflect multiple revenue streams accurately. Cost estimation. Cost must be split into fixed and variable. This gives visibility into the operational scaling. We distinguish between the regular item like staff salaries and variable one like water and electricity. Capex such as the initial equipment setup should be clearly separated to avoid misinterpretation. Profitability and margins. Margin gives stakeholders quick insight into the business viability. Calculate gross, operating and net margin and benchmark these with industry average. For EcoWash, a gross margin of 55% in year 1 aligned with industry data and the model shows profitability from month 10. Many forget cash is king. Include a proper cash flow statement, not just profit and loss statement. Consider payment lags, capital expenses, and how fast you collect receivables. For example, EcoWash has a 30 days B2B payment cycle and its initial setup cost is amortized over 3 years. Scenario planning. Investor wants to know what happens if things don't go as planned. Show base, best, and worst case scenarios. EcoWash break even shift by 6 months if volume drop by 20%. This kind of a stress testing builds confidence in your projection. Financial statement integration. Make sure your income statement, balance sheet, and cash flow are interconnected. Any profit should update retained earnings and loan should reflect in liabilities. In our case, EcoWash integrate 80 to 100,000 equity and 80 100k loan into its financial statement. Time-based realism. Use monthly or quarterly granularity to better reflect the timing of the inflows and outflows. Don't show all income in month 1 and expect to be credible. Staff salaries, license fee, utility bill, these need to be mapped based on a real world cycle. Visuals and clarity. Use chart to make trend visible. Revenue growth, cash runs, and break-even points are easier to digest with visuals. EcoWash uses a color-coded Excel model that is easy for investor and partner to understand without overcomplicating things. Ongoing updates. Finally, a model is not a one-time exercise. Set a system to update projection monthly. Use software integration like Xero to track variances and improve forecast. This shows that you are serious about data-driven decision making. With this checklist, your projection can move from guesswork to strategic planning, whether you are presenting to investor or making internal decision. Ticking all 10 boxes build credibility and reduce risk. Thank you for watching.